Hello and welcome to the Maker of It for the week beginning September 18th, 2017. I'm going to do something a little bit different this week and sort of break out of what I normally do, which is having a fairly Australian-centric view, because this week is a ginormous week in macro policy and in macro thematics. And the reason I say that is that we are entering into the two largest central banks on the planet, being the ECB and the Fed, having some big major meetings this week. And from where I can see it at the moment and what we're likely to hear this week, it's around the start of the great taper. And what I mean by that is movement on balance sheets of both the Fed, the ECB, and the week after, I actually think also with the BOJ, the Bank of Japan, will start to begin. I'm going to concentrate just basically on the Fed because this week there isn't actually a policy change meeting scheduled for the ECB. There is a policy meeting, but no change. So I'll leave them to one side. But the Fed is clearly the part you need to look at. Listening to what we've heard over the last 3 months, also looking at the market, looking at interbank markets, etc., it's almost baked in that on Thursday morning, our time here in Australia, that Janet Yellen and co will start to unwind the largest QE program that we've ever witnessed in human history. $4.6 trillion is the balance sheet at the Fed, and they are going to start unwinding that slow and steadily. I expect them to probably do 10 billion a month, and it'll probably be same as what they were doing when they were buying them up, with Treasury and mortgage-backed securities roughly half and half. It was about 55 to 45%, and I think that's where they'll start to try and start taking away that risk. It does actually have a benefit for them. They obviously are de-risking themselves, but it also means that they will start to do the other side of the equation that they're talking about, which is rates and the possibility of raising rates in December. Doing this kind of selling means that you're actually going to move the yield of bonds up. I know we're sort of going a bit away from what we normally talk about, but if you look at it, selling into this market will mean yields go up, and particularly at the back end of the curve. And what I mean by that is the longer dated securities, your 30-year Treasury bonds, the ones that they were buying up quite heavily, they're the ones that are actually going to get sold into the market. And therefore you will get a slight steepening of the curve. So they get a tightening policy anyway, and therefore may not have to raise rates. But the reason it affects us and what we need to think about here in Australia is that this gets back down to what the banks have been telling us for the last sort of 18 months, is that wholesale funding is getting more expensive. It's why you have to watch the Fed, because a lot of the funding that isn't picked up by us, the retail investor, whether you've got a term deposit or what have you in a simple money market product, is being picked up by the bond market. And this is where it will actually affect you. So you need to listen to what the Fed has to say, listen to them talk about the idea that they are going to possibly ramp this up to maybe $15 billion a month, and so on and so forth, and the effect that it's having on yields. Because if they do see that pressure putting on our banks, they will possibly have to think about, again, raising rates out of cycle like they have been over the last 12 months. The other thing I really want to point out is also the political side of the Fed. And what I mean by that, Janet Yellen now has 4 out of 7 seats vacant for voting. And it also suggests that Donald Trump now has his opportunity to bring in his candidates sooner rather than later. The catch to this is that everything we've just discussed could be unwound by him coming in with his candidates. He wants a very dovish Fed, he wants a very stimulating Fed, and therefore more money into the economy, and that could unwind this. So there is a cat amongst the pigeons scenario, and I really want to hear her outlook for the board, because she's actually starting to move towards a neutral position, something she hasn't held basically since she's become chair. So all of this winds into it. And again, as I said, the Australian-centric point of view is what happens to US bond yields, and therefore what the banks are getting on a wholesale funding side. So a huge week for how you look at equities, a huge week for how you look at your home loan as well. Certainly something we'll discuss on Wednesday, and I'll be doing a very big piece on Thursday to cover this off. So have a good week, speak to you soon. But again, Thursday morning, 4 a.m, watch the Fed.
At InvestSMART, our mission is to help millions of Australians to protect and create their wealth. This is why we now offer a life insurance comparison service. All you need to do is answer a few questions, select your cover, and compare the results. This quick and easy service provides quotes with up to 9 of Australia's leading insurance providers. You can compare the benefits of each insurer with our easy-to-use comparison feature. We have a team of qualified specialists who can answer any questions you have and make the application process as smooth and easy as possible. For more information, visit our website or just give us a call.